Dear students, so we have discussed many problems related to dissolution of partnership firm. So in the problems what we have solved till now, it was assumed that the realization takes place only once at the in one case or at one instant, so that whatever assets realized are going to be paid immediately in a order. Okay, but usually in the practice or practically this is not happening in the reality. This realization takes its own time. So first a few assets should be realized and the next assets should be realized later. So in such cases, how to distribute this or to how to repay the obligations and finally the owner's capital is a question mark. So for this sake, in the real world, what is happening is like they are assets are realized, and as and when the assets are realized, the payments are made in a order. So therefore, this kind of distribution is called as distribution of the cash, which is collected from the realization of assets, is called as piecemeal distribution of cash. So in this video, let us discuss something related to piecemeal distribution of cash. First meaning, what do you mean by piecemeal distribution of cash? The process of distribution of cash among the liabilities and partners as and when the cash is received is called as piecemeal distribution of cash. As I mentioned earlier, so we are not going to receive the cash immediately by selling all the assets. So it will take its own time. So but under this process, we distribute or like we pay the cash distribute the cash among the liabilities and partners as and when we receive the cash by realizing the assets. So this process is called as piecemeal distribution of cash. So how do you what is the manner of piecemeal payments? How do you pay this? And what is the process of payment and the piecemeal distribution of cash? First we pay to the realization expenses. Then in the second case we pay the liabilities of the third parties, in that this is the order we follow. The first one is secured creditors. Then after that, if something is left, then we will give it to the preferential creditors like income tax payable. And still if there is any what you call surplus, then unsecured creditors are paid. Unsecured creditors, after paying unsecured creditors, if anything is left, then that cash should be set aside for contingency liability. Suppose if these contingency liabilities are not happening in the future, then they are going to be distributed to the partners. Okay, for the next process this can be utilized. And thirdly, first we pay to the realization expenses, then outsiders liability, then payment of partners loans, and finally if something is left, then that should be paid to the partners. Okay, this is the process we follow while making the piecemeal distribution of cash. Now, methods of piecemeal distribution of cash. So there are two methods. The first one is highest relative capital method or relative capital method, or it is also called as proportionate capital method, or popularly we call it as surplus capital method. And second method is maximum possible loss method or maximum loss method, or it is also called as notional loss method. But according to our syllabus, we have only surplus capital method, and therefore in this video we will discuss surplus capital method problems only. I'll explain you about piecemeal distribution of cash with an example. Look at this example. Red, white and blue are partners sharing profits and losses in the ratio of 5:3:2 respectively. Their balance sheet as on 31st/12/2019, when the business wound up, was as follows. Okay, look at here. Credit side we have the capitals only. No liabilities belongs to outsiders. No liability belongs to the owners' loans. Okay, and the assets, these are the assets we have. Look at here. It was agreed to repay the amounts due to the partners as and when the assets were realized. Okay, what is the process of how do they realized? Okay, the first one, on 1st of February 2020, rupees 30,000 was realized. On 1st April 2020, 73,000 was realized. And on 1st June 2020, rupees 3,000 was realized. See, realization took place in 3 stages. Okay, now Prepare a statement showing distribution of cash among the partners under surplus capital method. See, under this method, how do we solve the problem? So first, we have to find out the surplus capital. Look at these three partners. They have capital contributed like a red 50,000, white 15,000, and blue 45,000. First, you have to set this capital according to this ratio. Now look at here, this capital is not according to this ratio 5:3:2. So first process and the first step under piecemeal distribution is this capital supposed to be set according to their ratio, profit sharing ratio. So for this, what you have to do is these profits are supposed to be divided by the ratios, the respective ratios, to find out the capital for profit, what is that, profit per unit, capital for profit per unit. So how do you find out that? They are supposed to be divided, these capitals are supposed to be divided by their respective ratios. For example, red's capital 50,000, this is divided by 5, the answer is 10,000. Then the next one 15,000 divided by 3, so we will get 5,000. Then 45,000 divided by 2, so we will get 22,500, 27,500. So we'll get that. Okay, now look at here, among this per unit capital, profit capital, per unit profit per unit capital. See, look at here, this is how much? 10,000. Here it is 5,000, and here it is 27,500. Okay, so among these three, so where the profit per unit of capital per unit of profit is less, it is in case of white. So this white, the per unit profit, capital per unit of profit, it is 5 here, 5,000. So that should be taken as the base, and accordingly set the capital according to their profit sharing ratio. Now this is per capital per unit of profit is 5,000. So 5,000 into 3, it is 15,000. 5,000 into 2, it is 10,000, and 5,000 into 5, 25,000. So now we get the surplus capital. So first step what you do is we have to find out the surplus capital. So let us study or understand that in detail in the solution. As I mentioned earlier, the step number 1, calculation of surplus capital. For this, prepare a table consisting of 4 columns. It depends upon the number of partners. Since we have 3 partners, so here we have 4 columns. If you have 2 partners, you need to have 3 columns. Okay, now we have red, the first partner, whose share is 5, white, his share is 3, and blue, his share is 2. Okay, so now first of all, you write the balances as per the balance sheet, capital balances. So I think we have saw that. So here it is 50,000, here it is 15,000, and here it is 45,000. First step, so what you have to do is deduct capital between red, white and blue in their profit sharing ratio. Okay, first you have to deduct the capital between these 3 partners in their profit sharing ratio. Okay, so whites, look at here, for this their capital, to set the capital according to their profit sharing ratio, what you have to do, first you have to divide this capitals by their respective ratio or share. So here it is 10,000, here it is 5,000, 15,000 divided by 3, 5,000, 45,000 divided by 2, it is 27,500. So find out among these 3 which capital per profit per unit of profit is less. So here it is less, 5,000. Take that as the base. 5,000 should be multiplied by these 3 ratios to find out this capital. So 5,000 is the list here. 5,000 into 5, 25,000. 5,000 into 3, 15,000. 5,000 into 2, it is 10,000. Okay, so that the balance due you are going to find out surplus capital here. Surplus capital, not balance due, surplus capital. So in this case it is 25,000. In case of white, we are not getting the surplus cash, and in case of blue, we are getting a difference of 35,000. That is the surplus cash capital in the first stage. Then Look at here in the realization process on the first realization. The first realization took place on February 1, 2006. So the realized value was 30,000, which is not enough to pay the total of this. So how much you have to pay here? 60,000, 35,000 plus 25,000. You need to have how much? 60,000. So when that is a question, so how to allot that 30,000 between these two? So that is a question mark. So for that say you have to go further one more step. Okay, so here what you do is again find out the surplus cash between these two partners. Again what you do, you take the ratios. What is the ratio of red? 5. What is the ratio of blue? 2. Okay, divide 25,000 by 5. So what is the answer? 5,000. That is the capital per profit unit. Okay, and here it is 35,000 divided by 2, 17,500. So which one is less, 5,000 or 17,500? It is 5,000. Take that as the base. Okay, now 5,000 is the base. 5,000 divided by 5, it is 25,000. 5,000 divided by 2, it is 10,000. So again here also you get a surplus capital, but for which partner? Only for blue. So this is the end. Since we have 30,000 there, even it is less than 30, in the second stage will you have to pay to the last partner. Okay, now let us move on to the second stage. We have to prepare a table showing statement showing a piecemeal distribution of cash among the partners. So these are the columns required like the previous table. Particulars red, white and blue. Okay, the first case, capital account balance. You have the balance 50,000, 20, 15,000, 45,000. Okay, first payment made to blue. Why? Because he is the partner who is having highest surplus. Okay, in the second stage we got a surplus for him 25,000. That should be deducted first. Remember that second stage surplus what we got 25,000, that should be deducted first. Then you find out the balance due now. In case of red, what is the balance due? 50,000. In case of white, it is 15,000. In case of blue, 45,000 minus 25,000, only 20,000 is left. Okay, now in the first stage of realization, what is the total amount realized? 20,000, 30,000. Out of 30,000, how much is paid? 25,000. Now what is the balance left here? 5,000. That balance of 5,000, that should be distributed between only red and blue because they're having surplus now. Okay, fine. That should be that the balance of 5,000 should be distributed between them according to 5:2 ratio. So 3,571 and 1,421. I have shown the working note here. Yes. Okay, then again find out the balance due now. Okay, balance due 46,429 and 15,000, 18,571. Okay, still they have a balance here. Only 5,000 is paid. Remaining balance had to be paid. So now payment made to red and blue towards their surplus capital out of the second realization. Okay, so here how much excess they have actually. So here first person has 21,425 in the second stage of surplus. So that should be paid first. Okay, so the surplus what he has is how much there? So 25,000 and the other person has 10,000. So that surplus has to be paid. Say 3,721 and 1,000, 5,000, and here it is 30,000 plus 5,000, 35,000. How do you get it actually? In the first stage the surplus was 25,000 and 35,000. Out of the whites 35,000, blues 35,000, we have already paid how much? 25,000 is paid here. What is the balance left in case of B? Only 10,000. Okay, and in case of red nothing is paid, so his balance is 25,000. 25,000 here plus here how much the balance? What is the balance? 10,000. Total 35,000 is to be paid. So out of that we have paid 5,000 here. So how much balance left now? 30,000. So that is divided between them according to the old profit sharing ratio, or else individually also you can do that. 3,571 is paid, and in the first stage what is the surplus left with the blue? Red. it is 25,000. 25,000 minus 3,571, we get 21,429. This side, what is the balance left? Actually, suppose in the first stage of surplus, what is the surplus we had? 35,000. Out of that, 25,000 is already paid. What is the remaining? 10,000. Out of that, 1,421 is paid. So remaining is 8,571. Hope you understood this. Okay, now again we get the balance due. So 46,429 minus 21,429 is equal to 25,000. Here nothing is paid. So now it is 8,571 deducted. So 10,000. Look at here. Now as per the table 1, see here we set the capital according to their profit sharing ratio. Now it is according to that. So here it is 25,000, here it is 15,000, and here it is 10,000. So 5:3:2. Now from here onwards, whatever surplus you get or whatever realized assets we have, distribute them according to their capital ratio or profit sharing ratio. Both are equal. See, capital ratio is also 5:3:1. 2. Profit share ratio is also 5:3:1. Okay, now, so what is the balance left actually? In the second realization, what is the cash realized? 73,000. Out of 73,000, 30,000 is already distributed here, right? Hope you got it. Okay. Then remaining is how much actually? 43,000. That should be distributed between these three partners according to their profit sharing ratio, which is 5:3:1. 5:3:1. Okay, now hope you understood. Sorry, 5:3:2, not 1. Now after paying this balance of 43,000, distributing 43,000, we get a balance. Balance due is 3,500 here. Here it is 2,100 and 1,400. Now we'll move on to the last realized value. How much? 3,000. So again that 3,000 should be divided between these three partners according to the same ratio, 5:3:2. So that 1,500, 900 and 6,000. After deducting this, nothing is left. So therefore the balance what we have is called as a realization loss. Okay, the realized value is not enough to pay to the capital of the partners. That is the meaning of this. Okay, hope you understood. Very simple. You can expect this for section B as well as section C in the final examination. Thank you.